Always good to have you in. Tell us what's your reading of the entire situation. Theresa May clearly didn't get what she set out to do. But, it seems that the markets have just brushed aside that and they're focusing more on currency and what kind of a benefit it can give to the home economy. Explain that to us.
Well, good morning from London, and thank you for having me on the show. I think several things can be said. One of which is, of course, we're probably the phase of maximum uncertainty for the UK economy, for UK politics, and for the course of Brexit negotiations. There is a great deal of pressure being placed on the Prime Minister, Theresa May, to announce whether she's going to continue in that role, whether she's going to continue as leader of the Conservative Party, or whether she's going to try to tough it out as the leader of a minority government. Whatever the case, her personal authority has been substantially diminished, and there's a real prospect that we get a second set of elections in the autumn of this year. The precedent for that would be 1974, when we had a hung parliament and then a second election. Now, sterling has fallen very sharply from 129 last night, immediately prior to the exit poll, to a low of 126.35 this morning. That, I think, is a fair reflection of the uncertainties. But as you rightly mentioned, FTSE is up, simply not because the prospects for the UK economy have improved, not because this is seen as being an enormous benefit to exporters, but rather there are so many internationally operating companies which are headquartered in the UK, which are listed on the London Stock Exchange, that it's a mechanical translation of overseas profitability into a weaker pound. This then pushes up the sterling value of the shares. So I wouldn't say that in any way that the reaction in the stock market is one of cheer. It is rather a reflection of the weakness of the pound against all the major currencies this morning.
Okay, so it's purely, the FTSE gain is purely on account of the translation of the overseas revenues of the FTSE listed companies back into the home currency, and on account of the weakness there, that number is going to start, the profits are going to look a lot better. But we've already come to levels of 1.26, 1.27 thereabout on the sterling right now, Nick. Do you foresee more downside? Because that is clearly capturing the uncertainty that lies ahead more than the equity markets.
Well, you're absolutely right in your summary. I do think that there will be further downside for the currency in the near term, because we're not sure who is going to lead the Conservative Party. We're not sure whether the Conservative Party is going to be in government, and we're then not sure what its approach is going to be to the Brexit negotiations, which are due formally to restart on June the 19th. It is possible to construct a scenario where this leads to a softening of the UK government's position, where we have a softer rather than a harder Brexit, where more trade-offs have got to be made, and where this might ultimately be of benefit to the UK economy. But it would be a very brave investor who were to take that very long view on the pound in the face of all these immediate near-term uncertainties. So I think it's reasonable to expect that over the next week or 10 days that the pressure on the pound would continue.
All right, Nick, just a quick question then. Your view on emerging markets, and an emerging market like India, how are you positioning yourself? Are you overweight? Do you think, in fact, we have run ahead of ourselves? And this definitely doesn't change anything for us.
I certainly don't think the outlook for emerging markets has changed by anything that's happened in the UK. I do believe that as long as the Federal Reserve can strike the right tone in the United States next Wednesday in suggesting that the weakness in the first quarter was temporary, that there's a rebound coming in the second half, that policy normalization will continue, I think under that scenario, then we could see the global leaders, the developed markets, continue to do well, and because the dollar itself, as some of the gloss has come off that oughtn't to upset emerging markets. So we've got the possibility next week with the Fed's statement, we get kind of the best of all worlds for EM, which is to say a dollar that doesn't rally, but a stock market that continues to move ahead. And against that background, you'd have to ask yourself what's not to like in emerging markets.
Okay, thank you. Thank you very much.